Stop gambling and start making money. In this video, we are going to discuss on how to beat the market, how you can make money consistently. That's the main thing, right? People are too focused in like trying to gamble on leverage and everything and not on like how to generate alpha. And the goal in crypto is to generate alpha. So what is alpha? Everybody talks about it, but nobody really knows, I feel, in crypto what is an alpha. So an alpha is like an excess return compared to your benchmark. So your benchmark could be Bitcoin, could be dollar or whatsoever. So it's like how do you overperform the market compared to just like holding BTC, you know, and waiting. For example, like Bitcoin is up 10%, let's say in the move of like in the last like 3 months, and like you did a trade on pump fund that did like 100% plus. You overperformed, and that's the thing we're looking for. So the main idea in crypto is like of course trying to beating like Bitcoin, and also like of course making money, right? And like how can you make that? I would say that in crypto there is a glitch that there is not in any other market. That is like you have a lot of inefficiencies. Why? Because you have a lot of FUD and FOMO in crypto. That is very unique. And the second thing I would say in crypto is like you have a lot of leverage. People are using a leverage a lot, and so you have price going down or up way more than they should, and also because of the FUD and FOMO in crypto Twitter. And so because of that, we have way more inefficiencies in the market than in TradeFi, and that's why I'm in crypto. Otherwise I would just be in TradeFi, because I feel in crypto you have way more inefficiencies. So here's an example with pump fund. Super hyped, the ICO super hyped and everything. ICO kicks in, price starts to go down, lot of FUD, more FUD, people JIT sold, people are selling, taking a loss, and like are starting to shitpost, are starting to troll, or like to spread some FUD on Twitter about pump, you know. And at some point, pump goes through like this level, and you have some guys doing the research, looking at pump fund like metrics on chain, and I'm going to explain like my trade behind pump fund, and starting to be like, okay, it's interesting, starting to buy. So you had the dumb money selling, smart money buying, smart money buying more, and at some point, so I had an alpha, you know, on like how the valuation was and everything. The price starts to go up, but it doesn't pump like just because of the price market is manipulated or like what retail usually say. It's just like at this price it was undervalued. It was clearly undervalued, and so the price is just repricing. And I said by the way, join trenches, right? Because I shared that tweet, I shared that trade, like explain in details in trenches. I also explained it in my Twitter, but like with of course way less details. And I said at 0.0055, it starts to become, I would say, valued to my framework, like a bit undervalued, but like fairly valued, you know. And I said behind like 0.055 and 0.065, this is the valuation I was like feel fair for pump fund. It pumped to 0.08 because now the market is in FOMO mode. So perhaps pump fund is slightly overvalued. So of course, undervalued, overvalued depends about the market, because let's say tomorrow there is like a pump fund ETF, it will not be the same valuation and everything. So that's the thing. Join trenches. Everything I'm saying is not a financial advice, right? But join trenches, honestly, it's interesting. I shared my pump kind of like trade on Twitter, but like with delays, not explaining really what I'm doing and everything and why and the level of my conviction, you know. I'm trying to explain it in trenches, you know. So my Twitter is kind of like a freemium. But it has been the super big win. Honestly, it has been the biggest win of Q3 for me. Very good trade because we had a lot of conviction. So when you have more conviction, you're able to size more. So once you have an alpha, it's like how big this alpha is, like how confident are you about this inefficiency in the market, and then it's like the conviction. Then how big is the conviction? And based on that, you can size more. So forget leverage. Leverage honestly is for retarded. I think in crypto I have seen only few guys using leverage the proper way. All the other guys I've met using leverage are just gamblers. So stop gambling, otherwise you lose everything. So don't use leverage. And be careful with all the guys on Twitter shilling you to use leverage, like big P&L cards and everything. Most of the time they are broke. Most of the time they are not traders, and they just want you to use their affiliated links to make you trade on perp because it generates money, right? I see it, you know. I share my link from time to time, and I see like the perp is like 90% of the revenue comes from the perpetuals, like the guy using futures and using leverage. But don't use leverage, right? Then another interesting thing, very important one that nobody talks about also in crypto is the alpha decay. So here we had an alpha, we made some money, and then you have the alpha decay. So one guy in trenches said, okay, Julian, if tomorrow pump fund goes back to this zone, are you buying? It was the zone like where we accumulated here. And I told him no, because let's say tomorrow there is like a, I don't know, hack or whatsoever, and like pump fund goes back here. Should we buy? It's not the same data we have here, same situation, so you should not buy, you know. So that's why we call the alpha decay. It's like once you have the alpha, there is this decay of like with time passing by, the potential of making money is going down. Sometimes super fast, sometimes not as fast. You know, let's say there is a news. Trump is saying I'm bullish crypto. This is an alpha. So if you have, so this is an alpha, and your edge, like how we can beat other participants is by being faster. It's like having algorithm, being connected, and boom, 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 bam, bam, buy. But here is a super big decay. So if you are a user, you check the news, you go back home, you connect on your laptop. It's like 1 hour. The alpha, the decay is 100%. Like there is no alpha anymore. And it's kind of like the opposite, right? You are more exit liquidity for the guys who take the alpha super early on. So that's why there is this alpha decay. So if it goes back here, we will not buy. Perhaps the next fair value price for pump will be here, or perhaps it will be higher. So there is this notion of alpha decay. So yeah, that's the thing that is very important. So your edge can disappear. So that's the thing to keep in mind. So join trenches, follow trenches, soon 4,000 followers. That's pretty cool. And so yeah, for pump fund, it was like more like a valuation kind of play. And so that's the thing. Now that you know that alpha is temporary, right? What makes you beat the market constantly is the quant mindset. Why? Because your quant skills will never leave you. And so that's why subscribe, share the video, comment any topic of video you want me to do. If you want to start to have the quant mindset and so become rich and stop being exit liquidity, you know, you want to think like a quant. If you think like a quant, then you're going to make it big. And that's the thing we try to do in trenches. Like, how can I have all these guys joining, give them the way, give them my way of thinking. Like the way I think is the only way to really beat the market constantly. And so now that we have that in mind, how to fight this alpha decay is just by generating more alpha and by also innovating. So that's the thing I'm saying in trenches is like, we have to keep finding new signals. We have to also focus on risk management because that's the most important thing. And that's why I love pump fund. I think they are innovating so much in so many fields. But at some point I sold my pump fund. And if it goes back, if it dips 10%, I will not buy pump fund. I will really wait a super strong opportunity, a market inefficiency to buy, you know. I would rather stay cash, you know. We don't care about inflation. Inflation is 3% a year. It's nothing, you know. When you are investing and everything, it's nothing, right? Just focus on the proper opportunities. And now it's like, how do we generate alpha? So there is a bunch. I have done a list. So there is fundamental analysis of like being like, oh, this coin has a super strong fundamental. I want to buy. There is sentimental analysis. That was one I did on Fartcoin. So I like the ticker. It was like, okay, but so you can combine a bunch of things, right? But for Fartcoin, it was like mindshare. You know, when it was here, I was like, valuation makes sense and the mindshare is so big. Okay, we have to take it back. So we bought quite a lot in the green zone, let it run, and we took some profits a bit early on, you know, and people were like, oh yeah, you took profit too early, blah, 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 as always, right? And then at some point I put the orange line because this is when like we sold all our bag. So I don't know, we did like perhaps a 2x, 3x, a bit more 4x like on this trade. Amazing, right? Short trade. Let's say we bought like March, April, May, 2 months, you do a 4x. You do that every 2 months, trust me, you will build generational wealth. And since then, I was like, okay, I'm out now. I don't feel there is any more interest in Fartcoin because of the sentiment analysis, because my alpha was on sentiment analysis. So I'm out. And since then, it did nothing. So all the guys who hodl Fartcoin probably sold below my selling price and locked some capital for nothing. So you took the volatility, which is bad. We want to avoid volatility for nothing. That you took like bad volatility, you know. So for those who understand, who knows it, like your Sharpe ratio went down significantly on that trade, which we want to avoid. Then there is other kind of alpha, you know. Could be from on-chain. We just shared an alpha on trenches, doing research on that coin too. Very low meme coin, low valuation meme coin, but on-chain looks good. Doesn't look cabal, doesn't look like we can be scammed. So I'm like, okay, it's a bit of a new coin. So I'm like, okay, a bit hesitating when it's like that, but it's a super strong one. Then you can have quantitative and kind of like market microstructure or macrostructure, but it's really quant stuff, like using math, using Python, using machine learning and all this kind of stuff. So we don't care. Then there is sentimental analysis, news also. These are like two very big alpha. Could be to manage your risk, right? Alpha is, of course, not only to make money, but sometimes also to avoid losing money, right? FOMC yesterday, I was like, okay, should I de-risk that before? Blah, blah. That's why I took profit a bit faster, like on some alpha we had, pump fund and also ones, because I was like, okay, I want to get back a bit of cash in case. And then there is also way of generating alpha. Could be valuation. Valuation is one I really like because I feel in crypto, this is something nobody looks at. And this is where I feel like I have a feeling for that, you know. I feel something about the valuation. And of course, combining all these kind of things is super cool, right? And there is also like other ways to figure out some alpha in crypto. Can't reveal all my secrets, right? But I have like, let's say 20 data points that I look at to build like valuation and so on. And honestly, I'm trying to improve that system, but that system is working super well, trying to improve it with time because I know that if my system is better, I will generate more alpha, and more alpha I generate, the more I can compound and make money. So that's something very important. That was your quants. Hope you enjoyed that video. Stop gambling, start making money. And it was a cool one. And cheers.